Good morning. I'm Scott Rudd, the Chief Strategic Officer with T3Live.com.
And I'm Jill Malandrino, and together we bring you the Morning Call Express. So futures are up nicely this morning. Germany passed the vote to help European nations that are involved with the debt crisis are going to strengthen the bailout package there. Asia closed a little bit up. Europe's trading mixed. We had some interesting action into the close yesterday, however, in our markets.
Yeah, another sell-off into the close, another sell-off into the top end of the range. So today the futures are up a little bit based on the fact that Germany had approval. There's still a lot of hoops for Europe to jump through. There's a lot of situations that still need to come into fruition as far as the clarity to the markets. But I still think that this range is key. I still think that traders, shorting into 3 up days and buying into 3 down days is the prudent thing to do to stay light. But one of these days it'll resolve. And to me, lately, leading stocks are showing some weakness. So some bearish activity is starting to increase, and maybe we will see some resolution, after the quarter's over and in the beginning of next month. So let's take a quick look at the S&P. If you look here, you will see that, this is where we turn tail on Tuesday, and then all of a sudden Wednesday, week again into the close. If you look at the overall pattern, you will see something a little bit disturbing to the bulls where you have a high, lower high, another lower high, showing that people aren't even willing to take this up to the 50-day, even with some buy pressure from the end of the quarter. So, today's futures being up, I think a lot of people are coming in short. They might look to see some relative weakness. But if we start trading through yesterday's low of 1150 on the spiders, you're going to see this lower end of the range become a magnet very quick.
Right, and we also have some thin volume today and tomorrow with the Jewish holiday, so it's going to be, you have to be a little bit more nimble because you could see some more volatility and some more swings in there. We have quite a few economic data we're looking for today: GDP, jobless claims, pending home sales. We also have the NATI numbers coming out at 10:30. So let's move into the sector. And we are going to talk about the exchanges, which is something that's interesting. We have so much volume because of the volatility we've experienced. We have margin requirements. We hear everyone saying the margin clerks are getting happy, so why is gold and silver moving like it is? So I think the exchanges represent a really good opportunity here.
Well, the exchanges have been acting somewhat well. I'm going to look at the pattern still. When the market's pressured, everything gets pressured, but what you want to see is relative strength. If you look at the CME, we've spoken about this, some nice trades, earlier, in the month. But right now, it did fail at resistance at 270. You have 2 harsh down days that you don't want to see in a row. If the CME starts getting below 250, you could see this range start to break to the downside. So I would take care here, even though we have increased volatility. One thing that's looking a little bit better is the CBOE. Look at this chart. This chart is actually above most of the moving averages, cleared the 25 resistance. It did have a minor outside day as a sell signal on Tuesday, followed by some downside action yesterday. So I would say if you're holding more than a tier 1, look at this 26 area as a stop, because if it breaks this, you could easily see a move back down to 2461.
Right, yeah, we've traded CME before with the options profits videos, and we did really well with that. I think it was back in July, again, on the same premise, because volume continues to increase month after month. Moving along to the trenches, we're going to look at some ETFs that have been a little bit weaker. We've spoken about them just about every day this week, the XLF, the XLI.
Well, it just shows you that you could time these things. That these, even though they're in macro downtrends, as traders, you could use timing mechanisms. We spoke about OIHs, which I'll go on first. What's interesting is that people are now talking about stagnation or stagflation, that maybe we get 5 to 7% returns over the course of a year, but not if you watch this show. The OIHs, showed a really nice strategy for us where you could have bought it at 108. Our sell target was 115 to 118 into this gap fill. You have to take that trade these days. That's all you're getting, because then look at yesterday. Boom, right back to the lower end of the range, and this looks lower. Also, XLF, we were talking about the financials. People are like, can you buy these financials? Bob Bassani gave me a great shout out on the 3rd up day. I'm like, you know what? I'm selling it to 1250. I'm not buying. Don't get excited. You still can't buy excitement. So if you look at the XLF, you will see financials are still a problem. You had, move to the lower end of the range and a nice 3-day pop right back to 1250 on this XLF, but this was a great area to sell. Now you have another 2-day weakness, and now you have to see if it continues the trend. And if these weaker sectors are only worth a day and a half bounce, we're still going to have pressure. And if we start to see more deterioration in the better acting stocks, then this lower range should be resolved to the downside.
Speaking of better acting stocks, Apple, let's take a quick look at that before we round this out.
Well, Apple has been my key barometer. It's starting to show a little relative weakness. If it starts to close below 395, and lose the 21-day, you could see a quick move to 385, and that'll psychologically hit the tech sector.
Okay, so we have some thin volume over the next couple of days. We have some important economic data that we'll be looking for today.
And just catch us for the full version later. Thanks for tuning in.
Thank you.